Hello and welcome to TA for Traders. I'm Nigel Croft and it's Tuesday the 4th of April. In this video we're looking at two currencies. We'll be looking at sterling and the loonie. So that is the GBPUSD Forex cross and the USD to the Canadian Forex cross. What we'll be seeing is that both of them are actually for the short term indicative of a dollar strength. So for the GBP USD, that's for the market to move down in the short term, and for the CAD USD, that's for it to move up. Please do stay viewed. So here we have the daily chart on sterling. Each bar represents 1 day's trading, and what you can see is that the downtrending red line, that's the 200-day moving average, and that is an overriding negative influence on this market, as it has been for quite some time. What we can see at the moment is if right on the currency is this blue line moving sideways. That's the 50-day moving average. That's giving support at the moment. Spot on this chart is 124.47 and that's at 124.30. So the 50 days given the immediate support. Immediate below there we've got the yellow line, which is the 20-day moving average. That's giving support at the 123.81 level. Below there you're looking at where the trend has been before, so you're looking at support at 121, and then over here from the lows of 16th of January 120.01. RSI not really given us any indication of momentum either upside or downside, virtually neutral, trading at 52.04, slight downtrend. MACD looks like it could be rolling, but wait for confirmation on that. Again, slightly negative. If you look at the weekly, so now each bar represents 1 week's trade, you can see obviously the bearish picture that that's been in place since the Brexit vote last June. Is this just a flag before the next bear phase, or is this a bottoming picture? Still hard to tell. The jury's still out. I mean, obviously at the moment we're in this trading range between 127.60 and 120. We're towards the upper, we're more than halfway towards the upper boundary, but really that's no indication that we're going to break through. We are finding support on the 20-week moving average, this yellow line, which is now actually forming a base picture. But that's, as you can see, that did actually happen back in where was that, in November last year, so it's not indicative that the market is bottoming. RSI could be in a slight uptrend but still below 50, and the MACD is okay, showing some signs of positive momentum. Really this weekly is pointing to further range trading, giving no signs we're either going to break up or down at the moment. On the shorter term picture, this is the 4-hour chart, so each bar represents 4 hours trading, and here you can see things are starting to perhaps look slightly more negative. We've come back below the 24-hour and the 54-hour moving averages, and the RSI's dipped back below 50 and is in a downtrend. The support here seen at the 123.95 level, that's the support from the 29th of March. If that fails, there's a bit of support at 123.37, but then we're looking at the 121s. So you would hope that the support will hold. For this slight bearish picture to collapse, would need a quick rally back above the moving averages and back above these highs that we saw on the 31st of March, which is the 125.50. So really, at the moment, short term on the 4-hourly chart, looking for further downside. On the support resistance levels, these are all from the daily. So first resistance 126.16, and then at that downtrend in 200-day 126.80. With the immediate support, as I said, it's only just below the market. I mean, actually, there's another support in here, the 50-day, which is virtually at the market, and then we've got the 20-day 123.81, and the second support at 121.90. Okay, moving on to the loonie, and here, like on the sterling chart, it's looking like we're going to see further excuse me, we're going to see further dollar strength. You can see that the market consolidated on the 20-day moving out. This is the daily chart, by the way. On the 20-day moving average last week, did dip below. That will have sent some people bearish. What's it done? It's bounced back up. It's shocked them. It's gone back above the 20-day moving average. It's got momentum. We've had two very positive candles, a third positive candle tomorrow, and it's three white soldiers, as they say. And we would be then testing this resistance, which is at the 134.90, 135 level. On the downside, there's support from the 50-day moving average, 132.46, and then the 200-day moving average. As the index stays above the 20-day, that will start to move up and maybe give the trampoline effect to push this currency higher. On the weekly, you can see that after the declines that we had leading into the election and over the election process, that we've had this long phase of consolidation, slight uptrend. If we can bounce off this 20-week moving average and break through that resistance, then we would be testing the upper channel of that trend, which would be towards the 140. So quite important the next few weeks trading. On the downside, I mean, we are finding immediate support from this 20-week. The 50-week would then come into support if needed at 131.64. But this picture would look very positive if it was to break up. Even if we have 1 or 2 more weeks of a sideways move, that would then be showing a reverse head and shoulders, which again would be very positive if we were to move to the upside. And finally, on the shorter term, the 4-hourly, I mean, you can see here the breakup that we had during yesterday's trading. The moving averages here, we're getting the 20-day just about to cross the 50-day, which would be a positive sign. Medium term, very positive that we bounced off this red line, which is the 200 4-hour moving average. Sorry, this is the 24-hour crossing the 54-hour, the yellow crossing the blue. Perhaps we're getting marginally overbought with the RSI just ticking up quite quickly, but the MACD is confirmation of upside momentum. Any consolidation will find support at the 134 level and then at the moving averages, and then you would expect further move ups once we found that support. But it could just keep going, this market. And then the resistance levels you can see at 135 and up to 135.30. And the support resistance levels on the USD Canadian dollar, you've got the resistance 1 at 135.35 and then 135.99, with the support at 132.78. And then at the moving average 132.46. So that has been TA for traders on Tuesday the 4th of April, looking at some currencies. What we could see from that is that in the short term, further dollar strength should be expected. So therefore we expect a move, it looks like a move down from the technicals on sterling and a move up on the Canadian dollar. Thank you for watching this TA for Traders. Please remember that the information I give is my opinion only and for educational purposes and is not investment advice. Thank you.